Greetings, everybody. Daniel here. So, I want to give a quick introduction of myself. Um, you've probably not seen me before. I'm not new, but I've just not been on social media for so long. I've not been active on social media because I've been busy trading for myself, discovering the charts, studying the charts, trading. Um, but now I feel like I need to start. I need to start calling people out. I need to start um, providing. I need to start sharing. I need to start sharing my journal. So yeah. So first of all, I want to give all the credits to um, the Inner Circle Trader (ICT) because he made me understand the markets and how the algorithm prints. All right. So what I teach here is is not what ICT teaches, but I've been able to find it myself with the help of ICT himself. So these are the stuff that he don't talk about. These are the stuff that this is where you need to go into the charts and figure things out. You're by yourself. Um, by the way, I want to make it clear that I'm not going to be providing any signal service. I'm not going to be providing any paid stuff unless it's a private mentorship by someone that really desires. All right. I love helping people. Um, I love teaching people. I don't want anything from you except one thing. I want you to support me. Um, that's the biggest thing for me. Your support. You can support me by subscribing to my YouTube channel, by following me on IG, on X, joining my Telegram channel. Um, I want to build a community, right? There is something I might provide in the future, um, which is live trading. And my live trading is going to be different from all these other gurus where they sit on the chart buying, selling, and don't know what they're doing, catching a couple of pips, a couple of ticks, dead risk to reward, right? Um, Not taking the trades live, right? So this is the only thing that I'm going to be providing that is going to be paid, and that's going to be in the future. And I might give you some free trials so you can, or once a week for free. I don't know yet. Um, so in this video, I'm gonna be covering lower time frame dealing range, lower time frame classic buy or sell day. So what I mean by that is I'm gonna be talking about the how to have eyes like an X-ray and reading the candles on the lower time frame and seeing how price is booked even on the lower time frame. By the way, my English, I'm sorry about it because English is not my main language. So when I pronounce something wrong or I don't know, don't get me wrong, okay? Um, so what I'm gonna be talking about is lower time frame dealing range. What I mean by this, all right? So these stuff right here is this is stuff where ICT don't talk about. Oh, I just don't know what happened. What the fuck? All right, sorry about that. These are stuff ICT don't talk about. This is where you need to put in the work and go into the chart and experience every single tick of the market, right? Um, so what you see here is a classic power of three candle, right? With a open, low, high, close, a fully beautiful bullish candle. So also right here, I love to draw, by the way, with this pen. So I'm gonna messing with the charts with it. Open, high, low, close, right? This is where the volume is at. This is where the money is at. This is where the energy is at. All right. This is displacement. So I want you to see how I know you know AMD. All right. I know you're gonna say this is accumulation, manipulation, distribution. All right, that's true, but on the 1 minute time frame, how can you have advantage of it? All right, so on the 1 minute time frame, on the lower time frame, how can you have the advantage of this candle, of these two candles? And what I mean by classic buy and sell day is this. All right, so the low is in London, a rally, New York retracement into the range. All right, and a rally to the upside. This is a when in a bullish scenario, and this is when we're bearish. Right, open. This is going to be in London most of the times. Right, opening price, power of three, open high, low, displacement, liquidity sweep, higher time frame PTR rate, etc. This you should know these stuff. All right, I'm not going to be covering every single small details, um, basic beginner stuff. All right, this is for advanced people. So don't complain if you don't understand, because you really need to be advanced to understand this. All right. So let's say this is the 1 minute time frame. All right. I want you to have an eye like an X-ray. I want you to X-ray this candle on the lower time frame. So what I'm seeing on the even lower time frame. All right. So let's say this is the 1 minute, a 1 minute candle. All right. I want to see a previous candle slow to be taken before this, right? Otherwise, it's not going to mean so much to me unless there is a SMT, an SMT, right? So let's say this is the 1 minute, and I don't know what I don't even have the trading view seconds chart, right? But my eyes knows how this candle looks on the lower time frame, all right? Sorry about that. So what I'm seeing on a lower time frame is, let's say we swept liquidity and we rallied upside and we closed such a candle, right? So this to me is a dealing range on the lower time frame, something like this, right? Something like this. So on the lower time frame, I see breaker, I see fair value gap. All right, so the fair value gap is going to be here. It's going to be right here. All right, I see order blocks, right, on the lower time frame. So basically this candle right here is a dealing range on a lower time frame. You know, this is how you find breakaway gaps. So this is how you anticipate breakaway gaps. So whenever I have a candle like this retracing into the dealing range, into the dealing ranges um discount, right? So this is how I range. I like to use the bodies. There is nothing wrong with using the full candle with the wicks, but um, the bodies, that's where the volume is, right? So whenever I see this right here, this is an entry. This is a fucking entry right here for me. The next candle opens, right? Open, opens. If it fails to go below this one, this candle's, this wick slow, that's a buy, all right? This is a scalping. You're gonna be a scalp magician, bro. Right? If you see something like this, if you see something like this, that's when you have the breakaway gap. Right? That's when you have the breakaway gap. Let's say you have a fair value gap somewhere around here. But for me, this is a this right here, this retracement to the volume, into the body, into the discount of the body, failing to close below, failing to close below 50% of this classic bullish candle, of this classic power of three candle, whatever you want to call it, I don't know. You guys help me name this shit. I don't know, but all right. So this is on the 1 minute. All right, and if you get something like this, right, a swing low, for example, this is an intermediate term low right here. All right, this will be now an intermediate term low, meaning you could enter off of here and put your stop here, right? Or a couple of ticks below, right? This is why go study ICT's execution videos. You see him sometimes have like very tight stop losses and going heavy, all right? This is the footprint of the algorithm. So this right here, all right, this price right here is this right here, all right? So these candles right here is this formation on the even lower time frames, meaning maybe the seconds, I don't know, all right? I'm not I was not the best in maths, but maybe the 1 second time frame, all right? So this is a classic buy day, all right? You should be understanding. So this is my first time making videos such, so feel free to leave a comment or something if you struggle with understanding me, right? The same goes for a bullish one, I mean a bearish one. Candle, open, high, open, high, low, close, all right? If the candle fails to close above the 50% of this range, you decide either the 50% of the wick to wick or the bodies, right? I like the bodies. You're free, all right? I like the bodies because for me it's more makes more sense to me, all right? So this should be green. All right. Should have prepared this earlier. I'm sorry. Gonna make the video a little bit longer, but open, high, and boom. Right? Something could do this too. All right. Let's say we had liquidity right here. All right. This is where you enter. This is a beautiful entry right here. This is what I would take without fear. All right. So let me just show you the example, exactly how it looks. This is the single candle. This is how it looks on the lower time frame, right? This dotted line, right, is how this red candle looks on the lower time frame. This is where you range the candle, and this is when it comes back to it, fails to close above the 50%. It means it's a classic continuation retracement into the dealing range on the microcycles dealing range. All right. So I'm now going to be trying to give you some examples. Price action. All right, I have not prepared anything, so I just need to find a good one. All right, so I want you to take a look at this piece of price action right here in the black frame. The red frame is for where the liquidity is, so we're bullish, all right? But I want you to pause the video if you want to. Of course, if you want to learn, you're going to pause the video. And I want you to note, or I just, with your eyes, or just think what you think, all right? Just think what you see right here. What I just talked about. Do you think you can find it? All right, so pause the video, right? Okay, so, um, all right, so it's right here. It's this candle right here. Remember I told you that I wanted to sweep previous low, all right? So what this candle did was, right, so we had a low, a high, right? So a lower low, all right? I'm gonna count the bodies, all right? So I would, because it's very so equal, you know. So I'm considering this as a lower low right here. So a low high, lower low, higher high. All right? A higher high. This is your market structure shift because we had price going lower, right? With the bodies, took out liquidity, there's equal lows. Yeah, I know. But this is a sweep for me, all right? So, the most important thing in trading ICT or trading with the smart monies is to define your liquidity, right? So this for me is a liquidity sweep. This candle, these two candles right here, all right? This took out the liquidity, right? This and this. So these two candles got violated by one single candle, all right? So I want you to see, all right? So there's a, this is beautiful, all right? So this is exactly what I'm trying to teach, right? This is exactly what I'm trying to teach you guys. So you see this fair value gap, right? But this this does not need to be filled because the range already um got retraced into, all right? We had price taken out liquidity. These two bearish candles got violated with a beautiful power of 3, classic power of 3 candle right here, all right? So, oh, this is Friday. Amazing. Look at this candle right here. So, okay, this is our CISD, right? This is our change in the state of delivery, right? This is our change in the state of delivery. So, I want you to measure this candle's, right? You see how beautiful this to me is a dealing range on the lower time frame. This is open, low, high, close, right? The next candle opens going lower into the discount of this range of this candle's range right here, and then going higher. All right, so this is what my eyes see. I'm I'm scanning these candles like an x-ray. All right. So we have a bunch of liquidity resting above here. All right, so look at this. You take the retrace the level thing. All right, look at this. This is not random. All right, what does the 50% of this candle's range, all right, of this candle's range align with? It aligns with an inversion and the CISD, all right? So this is an algorithmic footprint, all right? Okay, so the next candle is continuation of this dealing range. So now my this dealing range, all right, this dealing range right here, let me make it blue. This dealing range right here automatically moves up to here. All right, simple as that. We have another time. We look at this bearish candle. All right, if this closed below the 50% of this green candle, I wouldn't be interested in this. This wick, it doesn't matter. On the this is the damage. As long as I see this candle, this green candle, as long as I see this green candle close above the 50% of this range, that's a buy. All right, so why am I not interested if if the 50% of this bullish candle gets violated? Because on a dealing range, okay, I'm not gonna talk about this one. Um I'm gonna be sharing that to another video. So in this range right here, we have a fair value gap, right? Right? Below the 50% is a good fair value gap, all right? It's an it's a BISI, right? So if we close below here, below the 50%, like right here, that is a an inversion right there. So we got a PD array or maybe two get violated, maybe the breaker too, right? So that's what I'm not interested in trading, right? This is something I'm not gonna participate or press the button blindly. I need to I need to see how price reacts from these bullish and bullish and classic open high low close candles. All right, so we took out this. So this is on the 1 minute time frame, by the way. We took out this, failed to close below, came back into the range. What is this right here? If you've studied, you know, this is a rejection block. So this range, if price is bullish right here, unless it's an SMT, price doesn't need to come back down here, all right? Because if smart money, if the change in the state of delivery has already happened, it's not in the favor of smart money to come back down here. They're gonna be in loss, all right? Um, closed above again. We have this candles range, all right? And what does that align with? An order block, all right? Or a propulsion block, whatever you want to call it. I don't care. I don't care. I don't mind. Again, we have another one right here. This is probably a single candle on the higher time frame. All right? You see that? That's what I'm talking about. We have another one right here. Open low, took out the previous low. Very beautiful. Even took out this one. All right? Took out this one. Came back to the order block and the breaker block. Right here. Closed above, market structure shift. Came back. Rallied higher. There is the thing is, there is barely. How could you trade this one? That's what I'm like trying to say. Would you catch this move? Do you think you would have caught it? All right. So we have the classic power of three candle. 50% Y. What do we have aligning? Immediate rebalance. Right. Order block. And look at this range. This is the first fair value gap then. Yep. The whole range. No gap, no gap, gap. Right? This is something I'm going to be covering maybe in the future. Who knows? So right here, we're coming back into the inversion, right? Into the candles range. This is a power of three classic. Let's say I don't know what to call it, so I'm just gonna call it classic buy day candle. Classic buy day candle. Let's imagine this was in London, New York retracement to go higher. All right. And what we have, boom, there's no fair value gap, no 2022 model. All right. You wouldn't have got this one because you need a market structure shift. All right. So this is on the 1 minute, and so we have the liquidity, right? We have a bunch of low resistance, right? Low resistance, equal highs, right? To me, this is very equal, right? Equal low on the lower. You see these two wicks. This is equal high on the lower time frame. You're scalping right here. All right, so I think this is gonna be enough for this video. I don't want it to be too long, 25 minutes. I mean, if you've stayed with me until now, congratulations, because I don't know, I find it very boring sit and watch a 20, 30, 40 minute video. So I wanted to keep it as simple as possible, as short as possible, because but I can't, because like I want to dive deep into it with detail, so I could um I could say what is in my mind um as good as possible as I can. All right, so I hope you guys enjoyed, learned something new. I hope you go back test it. Feel free to tune it. I don't know, whatever you like, but the thing is to get the idea. All right, so I want you. I really appreciate your support. I'm new to this. I don't know, to social media and everything like that. So I need your support. Um, Feel free to comment below. Um, and subscribe. Don't forget, link in bio. Check out my other social medias, and until next time, stay safe.